Good morning. It's May the 31st, 2017, and the last day of the month, which has its own dynamics. We'll start with our customary disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So, let's take a look first at treasuries. Now, treasuries, because it's the end of the month, end of the quarter, end of the half of the year, anything like that, they can sell. People that are in the fixed income markets are interested in yield and interest rates, and they really don't follow the price or of their net asset value all that much until inflation really kicks in and starts to move things in a big way. So treasuries can actually sell today, and if the E-mini happens to rally, I think that'll be the case. The overnight news was China's manufacturing and service PMI beat the consensus forecast. It was supposed to be in the mid 50. It came in 51 plus. Their construction PMI was less than forecast. The People's Bank of China intervened in the yuan market last night and bought it. The move was supposed to be to punish speculators who've been selling the yuan short. In Europe, inflation was below forecast, which gives Draghi some wiggle room. The economic news was mixed, with Germany's retail sales probably the biggest number came in lower than forecast. I believe this is the second time that number has come in lower than forecast. And Germany's unemployment actually jumped. So the economic news out of Europe was mixed. We have some news this morning that normally doesn't impact the markets, but we've got Chicago PMI at 57.5. Anything over 50 shows economic expansion and growth. Pending home sales plus 0.5%. That one could come in lower than forecast. And then the Fed's beige book, which will get a pretty hard look. The news out of the Fed governors generally supports an interest rate hike in June. There have been a couple of trial balloons floated about no interest rate hike in June, but right now the market is assigning an 80% probability of an interest rate hike. I believe it's June the 14th or 15th when the Fed meets. So I'm going to guess trading range with equities pointed higher, so a little bit lower. So 11 to 15 sell 1, 19 to 23 sell 2. On the buy side, 1 to 5, and then 25 to 29 for buy 2. Everybody out here is worried about, we had such a mild winter, does that mean we're going to have a hot summer? Now, if you believe in average temperatures, a very mild winter, it based strictly on average temperatures, should lead to a mild summer if the average temperatures are going to stay the same. Okay, this is the September contract. It's way down, the spread's way down. So keep that in mind. And our numbers probably 153.16, 153.24, 154 even. The 153 even, 52.24, 52.16 is probably better support and resistance than our regular numbers. The 10-year will roll to that tomorrow, but today the 10-year probably is rolled when you looked at the volumes. It's pretty close. So right now, last rotate up stopped at 7, so 8 to 12 is number 1. 15 to 19, sell 1. 23, 27, sell 2. That would close the gap. On the buy side, we're here, so 53, 53.04 is number 1. 25, 29, buy 1. 17 to 21, buy 2. This is the September contract. Gold, when I look at it early this morning, I think was within $1 of yesterday's close. Pretty quiet. And it's higher now. So we're where we were. We've had a couple of days to break it right here, and we haven't. So we'll make 68.70, sell 1. 73.75, sell 2. On the buy side, our 60 to 62 still looks pretty good. And 55.57 for buy 2. Okay, Draghi has some wiggle room. The inflation numbers are not where he wants them to be. Coming in lower than forecast. So they do have some wiggle room. The yuan was hit hard overnight. The dollar is down. The yen was up this morning, if memory serves me correctly. So we're in our 1250 area. So 45, 55, sell 1. 70 to 80, sell 2. You can just look across this market. So 1275, there's a seller, and looks like pretty good buying against 1175. That's a 1-point range. On the buy side, 112 even, 1210, buy 1. And then 111.75, buy 2. So best sells at 12.75, best buys at 11.75. Okay, crude got whacked overnight. Again, most of the articles that come out on crude for long-term fundamentals show that the cost of producing oil from shale keeps going down. There was an article that I put into the room early. Talked about how the cost of offshore drilling costs are going down, where they're looking at break-evens now $40 to $50 a barrel, which historically is where it's been before they would do an offshore project. But as the demand for rigs and oil field services has gone down, so has the cost. So there was one field cited where they had projected development costs of $20 billion. It's been cut to $9 billion. That makes a big difference when you come to do projects. So offshore deep water Gulf projects are now starting to be revisited and committed to. Okay, 48, 48 and a quarter. We've come a long way. So stops below 48 will be buy 1. And 47.50, 47.75 buy 2. We're guessing it's a 47 minus 52 plus market. It took a long time to get to 52 and we just touched it briefly. 48.75, 49 sell 1. 49 and a quarter, 49.50 sell 2. APIs are tonight. Tomorrow we'll have the EIA inventory numbers, and right now they're playing for builds. But the OPEC, Russia, I've talked about it a lot. If I were going to change the terrorism dynamics, I'd dry up the money. And I would put a surcharge which would be interference with the markets. Everything wrong that you can say about that would be true from an economic standpoint, but from a self-defense strategic get rid of terrorism, if you make it where they can't send all this money to the terrorists, then you got a pretty good chance of drying it up. It takes a lot of money to buy munitions and fund people clandestinely, and take that money away from them, then makes it easier to do. But right now we're not doing it directly. We're doing it by increasing production, which is hurting oil prices, which hurts the ability of the Middle Eastern countries to fund the terrorists. Okay, I think we're sideways with an up bias, so selling failure to take out 18 to 20. It's okay. Followed by 24 to 26. Could make a new contract high today. I'm guessing trading range with an upward bias. 10 to 12 for the buy. 5 to 7 for the buy. So I look for a quiet day, trading range, upward bias, drifting higher. Be nice to see it explode and move quickly. And you never know what's going to trigger that, but we're really dealing with usually 2 to 3 days a week where we face a 6-point, maybe an 8-point range over the first couple hours of trading, and that makes it difficult for day trading. Not impossible, but just difficult. And so there's easier fields to plow, to use a farming metaphor, than the E-mini these days. Okay, Chicago PMI 57.5. Pending home sales up 0.5%. Both those numbers could come in lower than forecast, seeing how the Chicago is based on automobiles. And we'll see if that actually happens. Going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.